to the expert. Joining us now, despite the Christmas holidays, is our good old friend Arvind Sanger, Managing Partner at Geosphere Capital Management. Arvind, I don't know which part of the world you are. You are in that part of the world, perhaps, where Santa is still alive and kicking. He has, evaded our markets, but he is with you all in the US, I suppose. Has it been a great Christmas celebration there?
It has been. It has been a good year for the U.S. markets. It's been a good Christmas, and closing out the year hopefully on a good note. But I was in India last week, so it was interesting hearing perspectives of Indian companies too.
Oh, okay. I'll come to those perspectives in just a bit. But the big question in everyone's mind is how long will this U.S. exceptionalism continue? I mean, do you see the dollar going on over the 108 mark? Do you see U.S. yields continuing to be where they are and therefore, attract money out of emerging markets? Or do you see any signs of peaking off on either the U.S. equities or the fixed income parameters?
Well, look, I'm a skeptic that anything is unidirectional and that the U.S. thing will keep rolling along. There's a lot of good news that's discarded. So it would not surprise me to see some negative surprises as President Trump comes into office and implements some of his tariffs. Clearly, he's going to be very favorable and from in terms of regulatory relief. But there could be some negative surprises on the tariff front on some unilateral actions that could surprise the market. So I think. But let me answer your question more fundamentally. I think what's going on in the U.S. from a technology standpoint, the whole AI boom, is clearly long-term extremely positive. Will there be short-term a little bit of hype and a little bit of pullback? Absolutely possible. So nothing goes in a straight line, but I think the U.S. is in a very strong position relative to the rest of the world. Now the question really becomes how much of that good news is in the market, and do the rest of the world markets, which have lagged badly, start to play catch up? I'm ambivalent on that, but as a value buyer, I'm looking a little bit outside the popular areas to see where opportunities lie.
Interesting, Arvind, and that was exactly my question to you. That for a market like India, I mean, we've had to deal with the fact that the US market is going so strong. And the second is that there are growth concerns here, a lot of chatter. Lata was talking about the RBI's latest projections for FY25, slightly lower. So when you say you're looking out for values, does India make the cut for you? And how are you looking at this market in 2025?
Well, India, unfortunately, is stuck in my opinion, in no man's land. It is a solid long-term growth story, but short-term valuations do not reflect the short-term growth. Short-term growth is quite tepid. Valuations are still reflecting a very, very strong, I think price earnings to growth in many sectors is at least a 2, if not more. That's not cheap by any measure. So I think India might just go through a time value correction before it becomes truly table-poundingly value-oriented. So right now we are, we're looking for long-term value, but we're looking for short-term pullback to really get table-pounding, as you've asked.
And how much of a pullback? I mean, just put some numbers at a market-wide level, and at what levels would you be comfortable to nibble in to this market?
Well, look, the 10% correction from here in the Nifty would give us a slightly larger correction in the mid caps, and that could get to be interesting. Alternatively, if the market just grinds around here for another quarter, and then it could become, from a time value standpoint. So, you can get that 2 ways, as I said. You can either get a pullback quickly, or you can get a time value correction. The reality is that there's so much liquidity in India that people are just throwing money into the market. But for us who look at it globally, if the growth is not there, the valuations need to correct.
Okay, yeah, it's a skewed distribution of savings in India as well. which is why you're seeing this investment in shares. But Arvind, as and when you get your levels, which are the sectors that interest you? Among the big performers in the year that's ending have been these EMS stocks, the Keynes, Dixon variety. Then there are this, as Surabhi was explaining just a few minutes before, the capital market-oriented stocks, KFin, Motilal Oswal, or even the mutual funds, all those stocks. And then, of course, the ones that didn't do well, the old leaders, the HDFC Bank, Reliance, Infosys, TCS, the big pillars of the sensex and the Nifty have not done well. Where would you put your money?
Well, look, the financial sector is always kind of the lifeblood of the economy, right? So if the financial sector, whether it is NBFCs or it is some of the leading banks, like you mentioned, HDFC and others, I think there will be another leg in this cycle, which will provide opportunity, and they're not expensive by historical measures. So again, we need to see, some of the challenges kind of recede, and there could be opportunities there. In addition to that, I would say, do we look at stocks, something like cement? If you're going to have a capex cycle, obviously the capex cycle has been disappointing. Some of the, basic materials that are required in the capex cycle, power has done well, but I think there's been some pullback. Could there be opportunities there? So we're looking at, a lot of boring stuff, but even some of the consumption related, but not necessarily, FMCGs have done badly, others have done badly. But I think some of the consumption-related stocks, to the extent that there are niche consumption plays that might get attractive. So these are some of the areas that we're looking at where there could be good opportunities.
Okay, I know you don't talk very stock-specific, but HDFC Bank has spent enough time in its, 1,500, 1,700 levels. When they last announced their numbers, they seem to have got their deposit growth and their mojo back, maintained their margins. Does a stock like that become a buy?
Absolutely. I mean, this is a high-quality franchise, high-quality bank, and clearly they've gone through a massive time value correction, and they had the loan-to-deposit problem as they were digesting HDFC Bank. I think those challenges are largely behind them, and now it becomes more a question of the financial sector itself starting to get a little bit of its mojo back, and in that case, HDFC Bank would be one of the stalwarts that we would definitely be looking for leadership.
Okay, so you're looking at banks, you're looking at sectors like cement, and maybe even consumption. Let me actually, wind up by asking for some more inputs on that last piece, consumption that you said, partially niche pockets, because that's where there's still a lot of concern. It's very hazy. A part of the market expects rural to do better, but then there's this whole cry about an urban slowdown, so on and so forth. So how would you look at playing Indian consumption in 2025?
Well, look, consumption is a very broad term. We've been fortunate to have played some of the, travel and leisure type of companies. Those have done very well, the hotel chains and what have you. So that part of the, I'm calling it consumption, but it's leisure consumption that has done very well. Do we look at, some of the areas like FMCG, maybe more the rural play? Maybe it is, some of the bigger ticket items, or is it some of the electronics consumption, some of the electronics retailers? There are niches, again, as I said, where we're looking at where does the risk reward get interesting, where there's been disappointment lately, but we might see signs of a turnaround, or does it become some of the, value retailers in tier 3 cities? Some of those have disappointed. So there's been a lot of disappointment in these sectors. And if we see signs of some of these sub-segments showing signs of life where the valuations are not, super stretched, then those would be areas we'd look at. I don't have an answer for you right now where I'm pounding the table, but I'm looking for signs to see where some of these might give us opportunity.
Okay, we look forward to that and look forward to the next chat with you after the year, after the next year is inaugurated, 2025. And from all of us here, Arvind Sanger, wish you a very bright and prosperous 2025.
Thank you, Lata, and same to you and the rest of the team at TV18.
Thank you very much. Okay.